In addition, we have a couple technical people on the call with us today, so if you have any questions that are a little bit more difficult or something that's not super straightforward, feel free to ask those and we'll be able to take care of those for you as well. On the line today, I have Ramona Cedeno. I'll let her introduce herself. In addition, we have some people on the BSP team that would like to introduce themselves. Ramona?
Hello, everyone. My name is Ramona Cedeno. I'm the founder of Fabric Financial Services. I have a lot of experience with month-end closing, year-end closing, financial audits, and I have worked in startups and Fortune 500 companies. Recently founded Fabric Financial Services to provide accounting services, tax, and personal financial planning to individuals. And accounting services is targeting early stage companies. I'm a CPA, member of the AICPA, a member of the New York State Society of CPAs, and I'm very excited to co-host this webinar with Business Solution Partners today.
Thank you so much, Ramona. We also have some technical people on the line today. Hussein, would you like to introduce Business Solution Partners?
Yes. So this is Hussein Zaidi. I'm the Chief Technology Officer here at Business Solution Partners. I'm mostly involved with sales and business development and training for NetSuite. Business Solution Partners, we have a headquarters here in New York City. It's site offices in New Jersey, Stamford, Connecticut, and Los Angeles. We specialize in cloud-based enterprise solutions for all aspects of business operations. BSP is a NetSuite 5-star partner with 15 years of experience in NetSuite implementations, customizations, integrations, training, and support. We focus on e-commerce, manufacturing, wholesale distributions, high-tech and services-related businesses. Along with NetSuite ERP and CRM, we also assist businesses with financial planning, forecasting, consolidation, and reporting via adaptive insights, which gives them visibility into their corporate performance. Lastly, we offer a local, personalized approach to all our NetSuite projects, offering a long-term commitment you're looking for in a business partner. With that, I would like to give Mike back to Ramona and let her walk us through the NetSuite year-end closing procedures. Ramona, back to you.
Sure. Thank you, Hussein. We have the agenda on the screen right now. We went through introductions and introducing the speakers. We have, following that, we have a few items that I would like to go through. The first thing here is preparing for the year-end close. The focus of today's webinar is really to show you how to use NetSuite's checklist and how to close your accounts and your subledgers in NetSuite. However, I wanted to discuss a few items that you can do now to prepare for that. When we do the demo of the checklist within NetSuite, I will show you how to lock AP and AR, completing how to complete your inventory closing tasks for those companies that use the inventory module, how you create intercompany adjustments, if that applies to you, revaluating foreign currency balances, calculating consolidated exchange rates for reporting purposes, and eliminating intercompany transactions if you have multiple subsidiaries. And finally, we're going to close the GL. All those tasks are performed within NetSuite, and there is a nice checklist that walks you through that process, and we'll go through that. Towards the end, we're going to have some closing remarks, and as Bailey mentioned, we will leave all questions to the end, and we'll try to get to as many of them as possible. Right here, we're showing you some nice pictures of the team. On the left, and then you have David Smuha, who is the CEO of Business Solution Partner. Hussein just spoke, and Bailey was on the call initially. I have known David and his team for about 2 years. They implemented NetSuite at the company I worked for before I founded Fabric. And they, in addition to implementing NetSuite, they provided support and training to my team, and it was great having them available. I now sometimes work with them as we share some of, as we have some clients in common. So I'm very excited to be here with them today. With that, let's get started. So as I mentioned earlier, the focus of this webinar is really to show you how to navigate NetSuite to close your account. But I have found that there are many things you can do now between November and January to get ready for the year-end close. And if you do this now and more that you may have within your team, you'll find that your close will go a lot more efficient and that it's going to make everyone's lives happier. And when you're ready to talk to your auditors, you're going to be in a better position just to get moving. So some of the things I have here are the ones that I have experienced the most as I closed the books for companies that I worked for in the past. If you have others, add them to your list. The first item here is reviewing the status of your prior year audit findings. And I know it's near December, or we are in December, and this should have been done and may have been done in some cases, but I have seen a lot of situations, and I have experienced it myself, where the audit findings are just stored in a drawer and we forget about them for 12 months until we see the auditors walk in the door again. So we don't want that to happen to you. You have a few weeks to go through your audit findings from last year, and you might find that a lot of them can be addressed within a couple of weeks. You may have a finding that relates to the complexity of your Excel files, and all the auditors want you to do is create some checks to make sure the calculations are accurate. You can do that in 2 weeks. You may find that the issue was an adjustment that was required, that was immaterial to last year's audit, but as you build on that, it might become material to this year's audit. You can go and address that now. If you do that now, it's not going to be a finding again for this year. The second item I have here relates to balance sheet adjustments that may be required as of today. Your assumptions may have changed for some of your accruals, and if you know that or you can confirm that within your team, you can make those adjustments now before the holidays, and when next year comes, you don't have to deal with those. A couple of examples that I have for that are, let's say you are accruing bonuses for all your employees, and now the company has decided to pay out 100% of the bonuses, right, and 90%, you have to true up your accrual to account for the additional 10%. Or some employees may have left the company, and you know they're not going to get their bonuses next year. You can adjust those down, and this is a good time to do that. The third item on this list is assessing the status of your balance sheet reconciliations, and this one goes hand in hand with the previous one, but I wanted to separate both because the adjustments can be done within a week or two. The status of your balance sheet reconciliations may take a little longer if you want to actually bring them up to date. So what I have here, the reason I'm bringing this up is that there are cases when we have balance sheet accounts that we don't look at on a monthly basis. We know they're good. You have the ins and outs in the account that are your regular transactions. I booked 100,000 and I reversed 50,000. So why do I prepare a reconciliation for that account every month? You may not need to do that monthly if you decided within your team that you didn't want to do that and that it was okay, and it didn't affect the accuracy of your financials. But when the auditors come in, or if you're not a public company, or if you're not going through an audit, when your CFO or controller come in to you and ask you for your balance sheet reconciliations, they are going to expect to see a reconciliation, not you telling them, oh, all I book is 100,000 and reverse 50,000. So now is a good time to prepare your schedules, support the balances on your balance sheet, and as you're doing that, if you find adjustments, you can make them. You can do this through November, and all you have to do next month is add one more month. And believe me, this is going to save you a lot of pain during the first quarter when you're actually working on your year-end close. And the last item that I wanted to bring up is defining roles and responsibilities specifically for the year-end tasks. And the reason I find this to be very important is that you may have transactions that you do for the year-end close only, and the person that did them last year may not be with the company anymore. And we have several examples of that. I have come across instances where the fair market value of an account is done once a year, or the impairment analysis is done once a year. And the person that did it is no longer here, so everyone forgets what was done, what needs to be done. So you may have those instances. You may have situations where you have restructure within the team, or you have two people who have the same access level to the system and or reconcile similar accounts, and they're both doing the same tasks. It's very important to define who does what for the year-end close, because if you do that now, when the time comes, they do, and nothing is going to be forgotten. This actually, it's important when it comes to the roles and access levels within NetSuite, which is going to take us, when I go to the demo, you're going to understand how this fall into place in there. If you have several team members within your team who have access to NetSuite, the ideal situation would be to have some general users who have access to posting entries, posting invoices, and doing certain transactions within the system that are equivalent to their access levels. And then you have the administrator, who is the person who grants access and the person who has the ability to perform transactions within the system even after the ledgers and the accounts are locked. So defining those roles and reviewing those access levels within NetSuite is important as well. You may have two administrators, but it's okay to have two administrators, but you still need to define which one is going to do that. Is one just a backup person, or do they have different tasks within the system? Great, so I hope this is helpful as you get ready over the next couple of weeks. And then we're going to move on to the demo of the NetSuite closing checklist. Let me go there, and here we are. You have, when you log into NetSuite, this is pretty much what your screen is going to look like. And you may have been in closing periods for the last 12 months. If this is your first time, I'll walk you through how to get there. Your menu may look different based on what you have set up for your company. But to access your accounting period, you go to Setup, Accounting, and then you find Manage Accounting Periods. You just click there, and this is going to take you to all your active accounting periods. I'm going to be working with December 2013. That's how late behind we are. This is, we can find it here. Let me just scroll there. Give me 1 second. And before I take you to the checklist, I want to just show you a little bit of how the screen looks. So you have the period name. If it's inactive and you're showing inactive, it's going to have a check mark over here. You have a magnifying glass that takes you to your checklist. You have the status of the period, whether it's open or closed. If it's closed, it has this little check mark. And then towards the right, you have AP and AR and general ledger transactions. So if you have closed this individually, this will be locked and your period will be open. And once we close everything, this is going to show up as closed. So it looks right now like I have closed AR, which I will lock it. I will reopen it just for purposes of this demo. So let's go into our checklist for December. And this is how the checklist for this company looks. This might be different for your company, depending on the modules and features that you have enabled for within your system. This company has AR, AP, general ledger. Then it has inventory transactions because it uses the inventory module. This company also has intercompany adjustments because it uses the expense and time modules to process intercompany transactions. And for those items specifically, it has foreign currency revaluation because it must have foreign subsidiaries and foreign currency transactions. It has the calculation of consolidated exchange rates. Again, this is to translate your financial statements from local currencies or foreign currencies into the reporting currencies, which in this case is the USD. And it has elimination of intercompany transactions. Again, some of these are not going to apply to you. Specifically, when it comes to revaluation of foreign currencies over here and some of the intercompany items, this is not going to apply to you if you're not using NetSuite One World. So if you have NetSuite One World, you may have seen this already for your company. So the first item on the checklist for this company, I'm going to go in there and for 1 second and unlock it just so that you see how it looks. So this is how the checklist looks when I come in without the first time I do anything here. Locking AR and locking AP, they're both very similar. And as I mentioned earlier, when you lock AR, AP, or lock the GL, what you're doing here is preventing posting by the general users. The administrator can still post to those subledgers and can still post journal entries. So it's important to have defined roles. If everyone in the company is an administrator, everyone will be able to post entries, even when AR and AP are locked. So it's good to remember that. And this is something that you can address now. Look at your roles and responsible and access levels within NetSuite and make sure that you have them defined the way your company and your team wants. So let's go into log AR. And to go into a task, you have the green arrow to the left, the green circle with the arrow. The status over here will show you where you are with these tasks. So in this case, the gray means open. Green with the 3 dots means that it's in progress. It means I did something with it, not necessarily that it's halfway done. I touched it at some point and marked it as in progress. The green arrows mean over here with the circles mean that you can actually go to those tasks without having to do anything before that. So if I try to resolve date and period mismatches, the system won't let me until I finish the first 3. But if you look at this 3, you're able to lock AP before you lock AR. And the reason you can do this is that one is not dependent on the other. So you don't have to reconcile or finish AR before you can deal with AP. And I think there might be another one later on. So let's go in and lock AR. And when you get here, you have the ability to do this for 1 or more subsidiaries or for the company. If you have defined your process, your year-end processes as being timed based on the subsidiaries, for example, you want to close the UK subsidiary before you close the US to give you time to review, you can come here and just lock the AP, the AR for just that subsidiary, and later when you're ready to close for the whole company, you come back here and mark all, and you lock the subledger. So for this exercise, I'm going to be locking the subledger for the whole company. And the way you do that, and let me just add that you're only doing this after you're comfortable with the balances in your AR account. You have looked at your aged invoices and you have reconciled the balances. If you have reconciling items that you know are not going to be addressed before year end and they're not material, you can leave them. They should show up as a reconciling item in your reconciliation. If they're just sitting in the GL, no one is going to know what they are. So in that case, I'll suggest having an outside reconciliation to support those reconciling items. So let's mark all and submit. And at this point, AR is locked and no one except the administrator can post to that subledger. The next item here is locking AP, and AP works the same way as AR. It looks very similar. You can do the same, go through the same steps as AR, the same review and substantiation exercise should be performed for AP. So let's mark all, as this is a simple task, and submit. And now we're back to the checklist. So right now your AR and AP are blocked, not blocked, they are locked, and regenerate users cannot post to those subledgers. And but they can still post at this point. Let me just say they can still post the general ledger, right? So the general ledger is not locked yet. Now we're going to go into here, and we're going to lock the general ledger. And you mark all. Again, you can do it by subsidiary. And when we mark it all, and we can submit. And at this point, now all subledgers, all transactions are locked to general users. The next step on the checklist relates, so we're down to the fourth one here. This relates to inventory. So if you're using your inventory subledger or module, you have to complete these tasks before you can close the general ledger. And there are 4 tasks related to inventory. The first 2 lead into the calculation of the cost accounting for inventory. So it's very important that when you are performing this resolution of date period mismatches and reviewing your negative inventory balance, it's important that you do this with care, because these are going to affect the accuracy of the calculation of the cost accounting for inventory. So if we go into the first one, the resolution of period and date mismatches, what the system is going to look for here when you click on resolve date period mismatches, it's going to, and I'm going to click there for a second. What the system is doing here is looking for transactions where the date of the transaction and the posting period of the transaction fall in different months. And the reason the system wants to resolve those is that those dates are used to calculate your cost accounting for inventory. And if you have any mismatches, transactions may be included or excluded. If you come in here and you know that you have to correct dates, you can edit the transaction at this point and adjust the dates. And the dates that you'll be using depends on when the transaction took place, and that will be the posting period that you want the transaction to be in. Once you make those changes, you can go back to period close and mark the task as complete. The system will let you mark this task as complete even if you don't resolve those discrepancies. So again, it's important that you know when you're leaving something unresolved that's exactly what you want to do, because that transaction may not be included in your cost calculation. At this point, I'm going to mark this task as complete and leave my discrepancies open for the purposes of this exercise. And now the resolution of date period mismatches is complete. The next item, still on inventory, is reviewing your negative inventory. And what the system is going to do here, when you click on Review Negative Inventory, it's going to give you a list of all those inventory items that have a negative balance in the GL. So if you have an inventory account to track shirts, and you had a shipment of shirts yesterday and you haven't booked it in your GL, and today you have a sales order for shirts, and the sales order is higher than what you have in the GL as inventory. If you have set up your system this way, you will be able to process that sales order before you process your inventory in the GL, and that will result in a negative inventory balance. So when you come here to close your GL, to close your books, the system reminds you that you have a negative balance. You can at this point, adjust the inventory account. If you are 100% sure that you did purchase inventory and you just haven't booked it, or if there was a loss of inventory, you can come here and make that adjustment. And once you do that, you go back to closing the period. And let me just highlight here that you don't have to make those adjustments at this point. You can go to the person that handles inventory within the team and ask them to book their adjustment the normal way. And while they do that, you put this on hold and you come back here and you run this transaction again, and you won't have those negative balances. So this is giving you the chance, the opportunity to do it here, but you don't have to deviate from your normal closing procedures to make adjustments in inventory. You can follow the same procedures that you have during a normal monthly close. Just stop and go to your team and have them process those transactions for you. Once you're done reviewing this area, you go to back to close period. And similar to the task that we just completed before, where the system let you mark the task as complete even if there are dates and periods, the system will let you mark it as complete even if there are negative inventory balances. So again, remember that if you do that, when you go to calculating, and let's say you're using the average cost method, will not be including those shirts that are sitting in inventory, that are sitting in the warehouse. They're not going to be included in your cost accounting calculation. So if you mark it as complete, left anything out, just remember that it will affect your calculation of the cost accounting. So I marked that task as complete. And now we are down to the review of inventory cost accounting. I'm going to go in there, and what happens here is that when you click that review inventory cost accounting, the system is actually going to run a calculation. I'm going to click there for a second, and it says here, you have a little message that says that the cost calculation of your inventory within this period has been completed. So at this point, this calculation took care of all the transactions that came in and went out of the inventory account, the prices that you purchased and sold those at, and then remove them from the inventory account at, and then it's going to calculate based on whatever method you're using to keep track of your inventory costs. So if you have left anything out, this calculation will not be accurate. Once you have done that, you go to mark task as complete. And at this point, where we are here on the review cost accounting, and that task is closed, we have calculated the cost accounting for inventory. You do have another opportunity to review the inventory activity. And when you go into that task and you run this review inventory activity, the system is going to give you an opportunity to review the quantities of your inventory. And this is another place where you can review whether you had negative transactions, where you're missing negative balances. Am I missing anything? Did I buy a shirt this year that I don't see here? This report can actually be accessed via your report menu. This is a task that you can complete at any point during the month. You don't have to wait for this time to do that. And this report can be customized. You can add more information. What we're seeing here is just the item, the transaction type, date, document number, and the quantity balance for each one of these items. If you come here and you have discrepancies, you can ask your team to make corrections. And if those corrections affect any of the tasks that we just completed, the administrator can go back and unlock those tasks. Once the changes have been made, you can come back here and rerun them so that your cost accounting is more accurate. So we're going to go back, and the system took us out of the checklist to show us this report. You can just click the back button over here, the back arrow, and you will be back on that task within the closing process. You now mark this task as complete, either because you made the adjustments here, or you asked your team to make adjustments and they made them and you came back a day later, or because there are not adjustments, you can just mark this task now as complete. And now we're done with all the transactions related to inventory. Your inventory is finalized, your subledger for inventory is closed. And we will now move on to creating intercompany adjustments. As I mentioned before, this is only going to apply if you have those modules. But it's good to know this, as your company may acquire those modules later on, or you may have experience with them in the future at a different company. But the way this works is when you go into this task, the system is going to be looking for those transactions that were processed as intercompany transactions, not adjustments, but these are not GL transactions. These are transactions within your expense and time modules. If you're using a module to track employee expenses and employee time, when the employee is entering those times and expenses, they can note those as cross-company transactions. At that point, a GL journal entry has not been posted. They're just entering the actual expense or time reporting into the module and saying that they are cross-company. When you come here and create the intercompany adjustments for expense and time, this is when the system is going to create the journal entry that's going to allocate the value of those transactions between subsidiaries. So you will click on Create Intercompany Adjustments, and once you submit it, if there was anything here, it will show you that you have a transaction going from subsidiary 1 to subsidiary 2, and you can submit it and process it. And you can then go back to your close, you submit again, and oops, hold on one second. I guess because I don't have anything. Let me go back here. Okay, that is not good. Let me just go back to the checklist and show you once you submit that. Give me 1 second. Manage accounting periods. So if you have created transactions and so if you had any adjustments, intercompany adjustments and all that, let me go back in. So if there were any intercompany adjustments created, you would just go through those steps that I showed you. I don't want to go there so I don't get stuck there again. But if you had anything to post, when you hit submit, the system will post a transaction. And then once that happens, you mark the task as complete. And we are now at revaluating open foreign currency balances. This is only going to apply, again, if you have foreign subsidiaries with foreign currency transactions, mainly to companies that are using NetSuite One World. And if you do have those transactions, when you come here, what the system is going to do is it's going to look at, and this is focusing on the balance sheet, the system is going to look at balances within your balance sheet accounts that are recorded in foreign currency. So if your reporting currency is the USD, any transaction that is not in USD is going to be revalued, if it's on the balance sheet, to the month-end exchange rate. So if you have a subsidiary that uses GBPs and your reporting currency is USD and the month-end rate change from last month, the system is actually going to pose an adjustment to bring those balances on the balance sheet to the rate at the end of the month. So if you're working with December 31st, it's going to be used with December. It's going to be using the December 31st month-end rate to recalculate those balances. You run the currency revaluation, and then once you get here, you can see which accounts are being revalued. I wanted to add here that this is only going to work if you have set up your balance sheet accounts for currency revaluation, and not all accounts should be set up that way. But for those that need to be revalued, and you should follow the GAAP guidelines on that, for those accounts that should be revalued for currency changes in the currencies, you will set them up that way during the account setup. And when you come here, those accounts will show up down here as accounts that are being revalued during this process. If you find that there are any accounts here that you don't want to revalue or shouldn't be revalued, you should go back to the account setup and make those adjustments. And it's a very good practice to review your account setup throughout the year and to decide to do this once or twice a year before year end to make sure that the account setup wasn't inaccurate during the time the account was created, and that happens, is possible. So it's good practice to go and check that your accounts are being revalued, they're rolling up where they need to be on the balance sheet, so that when you get to this point, you don't have to spend time doing that. Once you have run your evaluation, you go back to, so we went here, currency revaluation. We need to hit save, so the system is actually doing this, and then you mark the task as complete. And we are down now to the calculation of consolidated exchange rates. Before I go there, I wanted to add that the revaluation of open currency, foreign currency balances is only revaluing your balance sheet at the subsidiary level. So in subsidiary, if there is a requirement, if the subsidiary has balances in foreign currencies, the system is going to revalue. If when you have multiple subsidiaries and you are running consolidated financial statements, which need to be in your reporting currency, in this case, let's say it's USD, the system is going to calculate the exchange rates that those financial statements need to be translated at. So if we go there, calculating consolidated exchange rates, if we go in there and you tell the system to calculate consolidated exchange rates, what the system is going to do, and it's going to show you what the rates are, what the system is going to do is going to take transactions within the period to come up with the average exchange rate, the historical rate. The current rate is just the rate that was that's in the system, that's fed automatically by NetSuite. But you must hit this calculate button over here so the system can take all your transactions during the period, the rates they were posted at, and come up with the average rate. And the same thing with historical. So you must select calculate over here, and there are some preferences that you can set within the system on how this is calculated, manually automated, and you can play with that when you have time. But you just select calculate, and the system now has taken all your transactions and calculated those rates for the type. Once you do that, you go back and you can review the rates, compare them to make sure they make sense by type. You can do that at this point and raise any questions that you may have. Once you do that, you go back to close period, and you can now mark this task as complete. And I wanted to highlight there that this can be very confusing, the difference between translation of the open currency balances and the consolidated exchange rate. So let me just clarify again that the revaluation of open currency balances is at the balance sheet level. The consolidated exchange rate is going to take your subsidiaries' financial statements, and when they come into that consolidation, the system has to take some balances and pose an adjustment, because at the local level, the subsidiary level, your balance sheet is going to balance, but when each one of those lines is converted into USD using, let's say, one account uses historical exchange rate, the other one uses the average exchange rate. When those are converted using those rates, the balance sheet is not going to balance. And I have a very good example here, because I just love foreign currency. If you look at this picture here, you can see that if you have a subsidiary that has pounds, the liabilities and the return earnings and equity all balance to zero. When that's translated into USD, this asset uses the current exchange rate, return earnings uses average, equity uses historical. When you translate those balances, this USD amounts don't add up to zero. And you have a difference of $100. So this is only at the consolidated level, and the system does pose an entry to make sure the balance sheet agrees. And that's what goes to your cumulative translation adjustment account, which is already in the system. You don't have to create it, and you cannot edit that account. So that's how the system processes calculations of consolidated exchange rates and related adjustments. We are down now to the elimination of intercompany transactions. And what this is those transactions that we posted through the intercompany adjustments, or we send cash to one account, to one subsidiary from the other. At the subsidiary level, you're going to have a receivable from one entity and a payable to another entity. And you want to show those at the standalone level for each subsidiary. But when you consolidate, you don't want to show certain intercompany transactions in your financials. So what this task is going to do is eliminate those intercompany transactions at the consolidated level. You will be able to see them at the subsidiary level. In order for this to work, again, you must do a few things. You must enable your intercompany elimination feature in NetSuite. You must have an elimination subsidiary, and you must have balance sheet accounts that are marked for intercompany elimination. And the last thing is you must post all your elimination, all your intercompany transactions using the intercompany journal entry feature. If you do all that and all your transactions are pretty clean, when you run the elimination, intercompany elimination task here, the system will process a reclass from AR into AP, the intercompany AR intercompany AP, for example, within the elimination subsidiary to zero out those balances, so that when you run the consolidated financial statements, your intercompany balances are zero. If you have not followed those steps and you have posted regular journal entries into those intercompany accounts, this process won't work, and you can still fix this, but you have to post a journal entry in the system and move forward. So assuming everything works, you run the intercompany elimination. This is another example. I don't have it. You can do it for a different accounts at a time or departments, and you hit save. And once you're done, you can mark this task as complete, and this has posted some entries within your elimination subsidiary. You can review those entries by running a balance sheet for your elimination subsidiary or going to those accounts. You can also review the financial statements for the subsidiary for which you process these reclasses. So the standalone subsidiaries with the receivable payable balance, you can review those and see that those balances are still there, but that they eliminate in consolidation. So we are down to the last task here, and you can see that everything is marked as closed prior to that. And now we're going to close the general ledger, and this is where once you do this, no one can post any more transactions, including the administrator, without reopening the period and providing a reason as to why the period is being reopened. So let's say we have gone through our steps, all discrepancies have been resolved, and now we are just ready to close our general ledger. You come here, and this is a very quick step. It just asks you to close the period. You don't do this by subsidiaries. At this point, you're doing it for the whole company. And you just click close, and no one can post after this without coming back here and reopening. So if we go down to bottom, you can see now that the closed, the GL is closed and it's marked closed here. I want to show you that there is a little button here called list. This is where you go to see all your periods. So if I go here now and I go to 2013 December, give me just 1 second, okay? So you can see now that December is completely locked and closed. If you hover over it, you can see that it says closed. Your AP are locked, AR, and general ledger transactions. If you needed to reopen the period after you go through your audit, the auditors find that you have some adjustments that must be made, you can go back in here, the administrator only, and you'll be able to reopen the period. My recommendation is that this is well documented, the reason why. I know some companies actually open another period within the same year to post adjustments. That might be a practice that you follow. You can go into the period again. Let me just try to scroll down a little. Let me just show you that again. So you go into the green arrow here again, and when you click there, you can reopen the period, but you have to provide a justification. Need to process audit adjustments. You can enter whatever you want here, but you want to leave enough information that if someone is reviewing this later, they understand why the period is open, and you can reopen the period. I'm not going to do that because I want to keep. And it gives you a warning, by the way. It says, if you reopen this period, all the periods will be reopened. All periods subsequent to that will be open. So I'm going to cancel that. I'm going to cancel that. And this is the end of the checklist demo. This is how you close your year end within NetSuite. You can move on to processing your doing your analysis, variance analysis, reviewing your balance sheet accounts, making sure everything is good, and ideally you do that before you get to this point, but a lot of times we lock the period, we close the period before we prepare final financials. So I hope this has been very helpful. I'm going to go back to my presentation here, and let's see. What I would like to show you quickly is, or discuss with you, is that you can have you have a lot of resources available in NetSuite that will help you with the year-end close. During the year, NetSuite sends you updates on changes to the system. You have webinars like this that you can attend. There are live events that you can attend. The NetSuite also has training videos that are very useful. They are by categories. If you need a video on how to post journal entry, you might find that. And then the help feature is my favorite because it shows you, it has a very extensive library of topics. You can do a search by topic on how to do certain things. It can get a little overwhelming if you are trying to do that during your month-end close. And that's how I used the services of Business Solution Partners when I was at my previous employer, and I recommend anyone to use them, is that if you're using their training and support services, you can call them anytime in the middle of the close, and someone will answer for you, will address the issue you have, they remote into your computer, and you can get moving with your close without having to put it off for a couple of days. So in addition to providing implementation services, they also provide training for your new team members, which is highly recommended. I have tried to train my team members myself, and it's never the same. So they provide training and they provide ongoing support all year round, and you can just call or they'll remote into your computer and help you with any issues that you have. We will move on to some questions now. I hope you found this information very helpful. Before we get to the questions, I just want to provide the, and before we get there, I actually wanted to remind you again that you have 21 days until the year-end close. So please make a use of them. I know we have the holidays, but take a couple of days to start looking at those tasks that you can close now, and you won't regret it when January and February come. Here is some information for contacting business solution partners. You can visit them at www.bspny.com. You can email them at support@bspny.com, and there is a phone number there for them. My company, Fabric Financial Services, again provides support with month-end closing, with audits, and if you're trying to implement procedures or streamline your processes, we can help with that at the company level. We also provide personal tax preparation and financial planning services to individuals. So please visit our website, which is fabricfinancialservices.com, and you can email me directly at rcedeno@fabricfinancialservices.com. Well, I will now open the window for any questions that we may have, and I believe Bailey will pass those along to me. Thank you, everyone, for joining us.
Thank you so much for that informative presentation, Ramona. We did get a lot of questions come through, so let's go ahead and get started with those. The first one is, how do I open periods for the new fiscal year?
Very good question. I want to show you on NetSuite. So you go, let me just escape for a little bit here, and let's go back here. And you actually do this by going to your Manage Accounting Period menu, which is where we were before, and you can go through Setup and Accounting. But once you're here, instead of going to close December now, I could just easily go in here and set up the full year. So this is going to set up my full year of 2015. When you do this, the system is going to do it based on how you defined your fiscal year. So if you have a fiscal year that doesn't fall on a calendar year, your first fiscal month is going to be different from December. And that defining your fiscal year you did previously when you set up NetSuite or set up the subsidiary. Thank you.
Thank you, Ramona. All right. Our next question is, can I prevent users from entering a transaction date that is not in the posting period on a transaction so there are no date mismatches in the inventory accounts?
Yes, you can. I won't walk you through that because it's a multiple-step process, but you can do this by going to Preferences. If you go into a Setup, Accounting Preferences, and you go select under Allow Transactions Date outside of posting period, you can choose to provide a warning to the user, to allow the user to post dates and period mismatch transactions, or disallow it. However, although you're asked this question in the context of inventory, when you change your preferences to disallow or allow, the system is doing that for all transactions, not just inventory. So something to keep in mind if you wanted to, if it's more important for you to have the date period mismatches for other items, you may just leave the inventory transactions mismatched and review them when you are closing the books. Good question.
All right. We have a whole bunch more questions here, actually, but I think we only have time for one more. We are hitting right up on the hour, and I want to be conscious of everyone's time. That last question is regarding 1099s. It says, I don't see the printing of 1099s on the year-end checklist. How do I process 1099s?
I would like to defer that question to one of the technical professionals on the call, if that's okay with you.
Sure. Hussein, is this a question that you can answer?
I think Marty should be able to answer this.
Marty, are you here?
Yes, I'm here. Can you hear me?
I can. Thank you so much.
Okay, very good. So I can take that question. The processing of 1099 isn't part of the year-end close process, but it is required to be done after the year-end and before February 1st of the new year if you have vendors that are 1099 vendors. And so the first step to do that is to mark the appropriate vendors as 1099 eligible by editing the vendor record and selecting the 1099 eligible checkbox under the Financial tab. That'll mark the vendors as 1099s so that the system knows to track that information for that vendor. And the next step would be to edit all of the 1099 related expense accounts to associate them with an appropriate 1099 category. And you would do that just through editing an account through the normal edit process. There's a drop-down for 1099 categories that you can select. Once all bills have been paid to eligible vendors for eligible expense accounts, then they'll be printed on the forms. To print the forms, you need to purchase the forms, the 1099 forms from your forms provider, and then run the report under Reports, Sales Tax US, and then 1099 forms. And that'll print the forms out for you.
All right. Thank you very much, Marnie. We do have another question in here. It's, can I complete my year-end closing tasks and close the fiscal year if there are still other open periods within that fiscal year?
I'll take that. So no, you must close all your periods prior to the one you're closing before you can get to close the one that you're trying to close now. So if you're closing December, you must have closed all periods up to November for any year that you have had transactions before you can close December. So if you have anything open out there, get started closing those first, so that when you get to December, you don't have any delays.
Okay. All right, everybody. I think that's about all the time that we have for questions today. If you have any further questions, the contact screen is up here. You can reach out to Business Solution Partners at support@bspny.com. You can also reach out to Ramona at Arcedeno at fibrickfinancial.com. fibrickfinancialservices.com, excuse me. We do have a lot more questions here. We'll be reaching out to you guys individually to get those questions answered. Again, thank you for attending this event today. We hope that you found it informative and educational. If you have any further questions, feel free to reach out to us. Have a lovely holiday closing season. Thanks.